folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, everyone. You guys are doing well this morning. I'm not feeling my best this morning, so I'm going to keep my camera off, but I'm going to try to do this live session the best I can. Hopefully you guys are doing well. Having a better morning than me, but you know, it is what it is. Happy weekend. Happy weekend. As always, drop your location in the chat. We'd love to see where you guys are coming out of. We'll get started here in just a few minutes. I do have quite a few pairs to go over. I'm going to try to hit as many as I can if I'm able. If I have to hop off for any reason, guys, I do apologize. Not feeling the best, but we'll try to get through as much as we can. Let's see. Good morning. Good morning. We have about 18 pairs to go over. I'm going to try to limit it to just a few minutes per pair just to kind of give you just a general idea of what I'm looking at. I'm not going to do too much top down. I've been so used to doing that, and I get stuck on one pair for like 15 minutes, and then we're not able to go over all the rest. So I'm going to try to cover everything today. All right, we got Mexico in the house, South Africa. Good to have you guys on here this morning. Brian, good morning. Appreciate it. Thank you very much. If you hear me slurping some stuff, I have my coffee in my hand. That I can never, ever give up. Good morning, guys. Appreciate the support. All right. Just a quick update for those of you who are in our funded account management service. We have more open spots available for a new prop firm called Next Step Funded. If you've ever heard of Next Step Funded, very good prop firm. I've passed a few challenges with them before in the past. I've received a few payouts from them in the past as well. And I actually totally forgot about them just until now. And I'm like, well, why not use them? Because they're a very, very good prop firm. We're able to pass those challenges easily. So that really opens up another 30 spots available for account management. But anyways, I figured I'd just let you guys know. Everything's going to be posted to the Discord here in the next couple of days. So stay tuned for that. I won't go over too much detail today with that. All right. LA. Oh, wow. It must be early. 7 a.m. over there. Raleigh. Nice. Awesome. Good to have you guys on. Sam, good to see you. For those of you who live in Raleigh or live in North Carolina, or even just like hockey fans in general, did you guys see that Carolina Hurricanes game a few nights ago? Sam, I'm sure you probably heard about it. Ended up watching it. It went into 4 overtimes. It was pretty sick. Went to bed at like 2:30 in the morning. It's crazy. All right. If you guys would drop any currency pairs you guys are looking at, maybe any currency pairs that you had good trades on this week, or maybe some more that you guys are looking at for potential setups to start the new week. I do have quite a few setups for you guys. a lot of the setups from last week's live session on Wednesday. We didn't have one last Saturday as I was extremely busy. A lot of them were playing out very well. And unfortunately, I'm not going to be able to hold one again next Saturday. My sister is getting married, so I won't be available for pretty much the latter half of next week. It's going to be a light week in terms of setups for all the VIP members, but we'll get back on it the following Tuesday because Monday is Memorial Day, so we'll have that bank holiday, which obviously the markets will be generally very slow. All right. Well, I'll go ahead and get started. We won't waste any more time. I appreciate the ones who got on time. You know, I'm sure we'll have a lot of people just trickle on in as we go. But as always, guys, if I don't answer your question throughout the live, just feel free to send me a message whenever you'd like. And of course, everything that I go over today are not signals. They're just mainly for helping you to kind of aid you in your learning and your directional bias and helping you see some potential setups for the week ahead. I don't trade anything but Forex pairs, so nothing in regards to crypto, stocks, commodities, futures, indices, anything of the like. All right, I'll share my screen. And I don't have access to see the chat as I'm sharing screen, so if you wouldn't mind just waiting till I stop sharing to ask questions, that would help. I'm going to go over about half of them first. All the ones highlighted in red I will cover, and then I'll go over half, and then we'll take some questions, and we'll go over the final half at the end. All right. So with AUD JPY, you know, of course, if you guys have been looking at any Japanese yen pair over the past week or so, you would know that we're very much bullish, right? Higher time frame, we are extremely bullish, but even currently, we're definitely still bullish. I know we look relatively bearish, but if you correlate that with all the other pairs, NJ, CADJ, EJ, GJ, we're extremely bullish, and I don't expect XXXJPY to go short anytime soon. We may see some short selling in the short term, but not in the long term. I think that we'll definitely continue higher and definitely make a new higher high. So wanting to follow with the overall trend of the market. Now, what we talked about last week. Now, I don't have these zones marked off because I just wanted to create a clear chart for you all today. We talked about this level of demand a couple weeks ago, and we also talked about this overall last selling volume right here. You can see we had two levels of demand that we came into. One was hit, the second one was not. And then within this counter trend, I know it's not very obvious, but you know, you can see these very discrete pullbacks, right? And then when we finally react off the zone, and then we make a higher high, the last selling volume becomes our new demand level. So I called that out, I believe it was either 2 Saturdays ago or maybe the prior Wednesday. I'm not quite sure. But anyways, we came back down and tapped into that level very nicely, and we started to rise. And we're forming equal highs now, so I fully expect us to continue long. Now, why do I have this trend line here? It's very interesting. This is sort of like what I like to call an inside trend line. Have you ever heard of an inside trend line? Of course, we don't trade trend lines. It's really just to see where the liquidity is at via, you know, the retail traders' positions. So we can see if we extend this as such, we have one touch here. Obviously, that's the first point of interest, right? And we have our second touch. So it broke and it sort of retested. Then we broke back above it and we retested again. We can see these 3 wicks. We broke back below it, retest, 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 broke back above it, retest, retest. So we can just see that this trend line is playing a very important role in this particular trend. Now, what that tells us is that retail is probably behind it. So we know when the retail is behind some sort of price level or some sort of move, then there's liquidity that follows. So really, since we're looking for longs, we're not really looking for any sort of big buy to sell. I mean, even if that occurs, I mean, fine. But overall, we're still looking for continuations to the upside. So I really want to see that excuse for price to push lower, to take out all the sell side liquidity resting here. Even if I were to adjust this trend line, I'll just draw a new one like this. We can see that we have 1 touch, 2 touches, and then we created that 3rd touch on Friday. So that tells me that there's a lot of sell side liquidity resting below this trend line. So we want to see price fall. Of course, we're not just going to be, you know, come Sunday market open, just selling, right? There's no position that needs to be placed. We're just expecting at some point price to eventually push down and sweep sell side liquidity, which that would provide us hopefully with enough of a pullback for us to get back in long on AED/JPY. So I'm looking at our overall zone of interest, this level of demand that has not been met yet. We can see that I think this could act as sell side liquidity. Now, what's really important to note, and I know it's blurry, I'm just really zoomed out, but that's okay. We have an expansionary move, a pullback, an expansionary move, a pullback, an expansionary move. Even though this is a pullback and this is another sort of expansionary move, we haven't made a higher high yet. So if we open to Sunday and we start pushing down, I fully expect all the sell side liquidity to be run and price to come into the demand just to continue with the overall trend of the market, right? So now the question becomes, what if we go like this? We start to push down. Well, the higher high, higher low, higher high. In this particular situation, what I would recommend for you guys when you look at structure is if you have a zone of interest and it doesn't come into it immediately, right? If it doesn't hit it, and then it makes, let's say we're in an uptrend, we make a higher high. If there is no zone to play off of, no extra level of demand, like in here, there's no clear level in my opinion, right? Nothing clear in here. I wouldn't obviously trade any of this. I wouldn't be setting any buy limits, nothing. And I would simply be waiting for price to push back down into my initial area of interest. Now, the next question becomes, well, is that not a break of structure? Well, if we're in an overall uptrend and we come down and take a previous low that could act as sell side liquidity from into a zone that hasn't been mitigated yet, I would just naturally assume no. I would naturally assume that it's not a break of structure, even if we did something like this. Even if we did something like this, I really wouldn't identify it as a break of structure just because, I'm not saying it can't be. I'm just saying that most likely if we're in a big, huge uptrend, something like this is not going to just, turn around and just totally flip-flop the market. I would like to treat any run on the low as a sell side liquidity run for just continuation to the upside, because so many times people get so caught up in these little tiny breaks of structure, right? They see something like this and then price just goes like this and they look to sell it off the pullback and then price, just ends up trickling on, right? Because we're in a bullish market. So naturally, we're most likely going to continue. This would obviously just most likely be a sell side liquidity run. What I would do is I would wait. If there's a supply level here, I would wait to see if there's a reaction. If we get another lower low in the market, if we actually fail to generate a higher high after the initial break and we make another lower low, then it's safe to say we can pull back and short off, and that would be our entry point. So that's how we can sort of read this, right? I am fully looking for longs because we're overall bullish. So regardless of the fact that if it opens and pushes down now or makes a higher high and pushes down, this is still my area of interest. I'll have to adjust these take profits. These are not going to be, these are take profits when price was originally right in here. So I'll adjust those later. But anyways, that's my area of interest around that 89125 level. I'm looking for overall continuations. So you're going to see that that's going to be a theme throughout all of our Japanese yen pairs. And we'll be seeing more of that. So with Aussie dollar, just look at the higher time frame. I know it's blurry. I'm just zoomed out here. So with Aussie dollar, we can see that this previous high, okay, it swept this previous high here, and we came into a level of supply. Did I sell it from that level? No, it wasn't a clear supply level, just because at that time we came into a higher time frame level of demand. I fully expected price just to continue long, but obviously we stopped here and we started to retrace. And who knows? We could easily continue long. We just may be experiencing a short-term pullback before continuations, right? But this is all in hindsight, right? It's all about building confluences for new positions that create setups. Obviously, this didn't create any sort of setup. It's just building on my hindsight analysis to put more pieces of the puzzle together as price is starting to develop, right? So we can see we swept this previous high, or really relatively equal highs in here, this previous high as well, swept it and then made a lower low. And then this counter trend was broken. We failed to generate the higher high, and then we started this downtrend essentially. All right, so let's zoom into what we have in here. Actually, before I do that, we have to understand if we're bullish, right? Because we have reacted from a higher time frame level of demand. And we can just clearly see this the 2020 COVID crash, right? We had that huge sell to buy. We had our repricing. We've talked about this many, many times, but it's always important to reiterate analysis, just because, well, for one, we have always new members joining, and two, it's nice to reinforce what we already know. So that's a good level of demand for us. I think that's what, 6214. And we came into that very beautifully. So I do expect price to continue long, or I would like to see reactions from demand, but we're still bearish, right? So we'd have to keep that in mind. I'm obviously not going to just be placing buy limits here. I'll look to see what kind of reactions we get around these levels. But we can see that this is a level of demand that has not been mitigated yet. Right in here is a straight imbalance from that low to that high, right? Just straight buying volume. And we can see that we have created equal lows right in here prior to coming down into this level. So whether that be, I just had, the 50% of the imbalance, which happens to be 6,550, and then the actual imbalance in the start of this huge demand level here at this daily time frame around 6,5221. Right, so we haven't come down into that level. And if we just understand how, big swings occur in the market, if we're going to get some sort of big move to the upside, don't you think we're going to have some sort of volatile move to sweep liquidity sell side before going long? Right, usually when trend reverses or continuations occur, before any significant move happens, usually we see some form of manipulation, in this case lower, to attract sellers, but also sweep the stops of anyone who is buying in here and then go long. So sweeping people out of the market before the market can continue. They also oftentimes build liquidity via these equal lows, because if the institutions are going to be placing their contracts down here, let's just say, then most likely what would need to happen is liquidity would need to be built up, right? Because we talked about this plenty of times before. If price is going to go long, price just can't just go long by itself, right? There needs to be someone on the other side of the market to sell. Right? If they're going to be buying here, if institutions are buying, they need someone to buy from, right? So they need a seller, right? You can't buy from no one, right? There has to be a seller for someone to buy something, right? It's just how anything works in life. So with that being said, that's how we can prove the credibility of the smart money strategy, by identifying liquidity via these equal lows where retail is likely to be buying. So therefore, when price comes down and runs their stop before continuing, it forces them to sell back their position to the market, because if they're buying, to get out of that position, they have to sell back their position at a worse price than they bought it from. So that's how that exchange occurs, right? That's how the positions occur in the order book. So if that's the case, if they're selling back their position, now institutions have someone to buy from. They have sellers. So now they can buy it at these levels. So that's just the general explanation for why we see equal lows, sell to buy. I mean, obviously you can watch a smart money course online and they'll tell you, oh, sell to buy, we come back down for mitigation and go long. Great, that's a good strategy, but the underlying logic behind it, this is what makes sense. So, there are obviously people that say smart money doesn't work, and they'll give me the clown face, but at the end of the day, they are where they are. Anyway, so we're looking for continuations, right? These are our equal lows. We know that most likely price is going to go short. And if we see here, we can see some sort of, I wouldn't say distribution, but when price broke the structure here, of course, we were still looking for pullbacks, right? We actually looked to sell it in here, and I think we lost that trade. Because we were looking at this as more of a distribution for a continuation into the low. And you would have had to fully expect that. But now once price pushes up like this, let's take a look at that daily time frame again. Remember how we talked about, and who's ever taken our smart money course, or really that smart money supply and demand crash course, that insane one that we have, we talk about type 2 manipulation. Type 2, we create equal lows, and then we create equal highs. There's like a previous high right there. We sweep the highs, right? You see that wick above not only these highs, but this high right here. So what this does is it takes the stops of anyone who is selling, but also attracts any buyers into the market upon the breakout, quote unquote, of this quote unquote resistance. So then price reverses back to the downside, right? To essentially push down and now take sell side liquidity. So we've swept all sellers in here out of the market, and now we're sweeping all buyers out of the market in here. Now we can run lower, come into the real level, sweep sell side liquidity, so attract sellers below the support, so trapping them short, and now going long and eventually taking their stops with the overall trend direction. Also, this stops out any buyers who are buying at support here when we push down because they're placing their stops below the low. So this is how the institutions look to attack orders. And then this is how they look to go from one objective to the next. If this is an actual objective, and I don't know this, I don't have the order book, I don't know what price is going to do. I'm just assuming based upon confluences that this is likely where price could possibly go long from. So if that's going to be the case, we like to see stuff like this before price comes into that level. This is how we can go from little tiny lower time frame objectives and all the little mitigations that occur in here, all playing out on the lower time frame in such that it plays out on the higher time frame as well. Right? So it's all going from one objective to the next. So we're looking for continuation short into this level because first of all, we haven't come into it yet. So we can look to still short it upon having the right confluences for a sell. But when price comes into this level, then there's most likely not going to be a sell setup. Or even if there is, I probably won't take it because it's not as highly probable. So I can see the buy to hopefully the buy to sell to buy. So that's what we're looking for. So why did I say all of that? Because this is what we talk about in regards to higher time frame objective. If we know and I can't say 100% certainty because for obvious reasons, but for highly probable setup, right? We have to understand where price is likely to go. Okay, if we know that price is likely to go short to hit a higher time frame objective, then we can look to short sell it if there is a setup on the lower time frame into that higher time frame objective, and vice versa for longs. So anyways, we're going to be pushing up, well, hopefully pushing up into our levels of supply. So we had that huge buy to sell. Remember, like I talked about before, any trend shifts, we're likely to see some sort of very volatile manipulative move. And we talked about how we swept that previous high to the left, and we swept descending liquidity. Huge buy to sell. We repriced, meaning repricing essentially, just for a very broad explanation, repricing simply means the failure to generate the higher high within this current trend. All right, this is where the trend stopped, and we formed the lower low. So this buying volume now becomes supply. Okay, so we have two levels of supply, right in here and then right in here. You can see that doji candle right there, filling up all this imbalance. So I would like to see an overall retracement, and I thought we were going to get it here, but then we started to continue, and that's actually, it's actually good because why? Well, liquidity, right? Liquidity, right? Buy to sell. That's what we want to see, more confluence, some building up of liquidity. So when price does come up into to these levels, if it does, then we have more confluence to be shorting it. All right, so I'm very much liking shorts from these two levels of supply to hit our overall objective as all the confluences were just described. All right, I won't take that long to go over one pair, I promise. CAD JPY, very, very similar to AUD JPY. All right, we're in a higher time frame uptrend, and we can see in this case we're likely to hit our higher time frame objective at 104. 104 is that first level of consolidation before the major drop. Really, we have another level of consolidation here. So if 104 is met, then we could even come up into like 106, 107, 108. So that's definitely a possibility. Japanese yen is definitely very weak at the moment, even though we are sort of counter trend bearish here. First and foremost, we still are overall bullish. And secondly, we're currently bullish here. We swept sell side. This previous low, we swept it, and then we broke the structure to the upside. Now we're just forming higher highs, higher lows. So just continuing with the overall trend of the market up into our supply level. So that's our first objective. So I'm not going to be selling from here, obviously, but that's the reason why I have that level drawn is because if price is going to short off, it wouldn't do it from anywhere but this level at least. Right? So we know we have room to go to the upside, or at least a highly probable chance. So anyways, we have a couple of levels. So, we talked about these two levels in here. We had a great trade from this level from a few weeks ago, and then another phenomenal trade from here, producing, I think, almost 20% for us. So anyways, we're continuing to make higher highs and higher lows. This is the previous low that made this high. Why not this low? Because this high never broke that high. This is the pullback. When we finally broke that high, we were up in here. So this is the range. However, could we not just continue with this structure? Yeah, sure. We could. Lower time frame structure, sure. We trade with the trend until it breaks, right? So where did the counter trend on the lower time frame occur? Well, low, high, low, high, low, high. Previous supply, right? That pullback, sell, pullback. Oh, we stopped and then we broke the structure to the upside. So that becomes our flip zone from supply to demand. So we can see, I think this happens to be, 100.265, and then I had just 100 because it's a psychological level. And we can see that from the lower time frame perspective, expansion, pullback, that would be in discount, right? Discount for continuation. So I'm definitely going to be looking for those two levels come next week, if we can get a pullback, that is. However, like I said before, the fact that this is a high that generated, or excuse me, this is a low that generated this high, we could see an overall pullback of the market before continuing. This is one expansion, one pullback, one expansion potentially. So with that being said, our secondary level here is still valid. That last selling volume that came into this demand, that's definitely still valid. We had two levels, so we got into this position here. Very good trade. But since we didn't come down into this level here, and if we finally have an overall retracement, because this is the expansionary move, we could come back down into our previous demand level. So that's definitely an opportunity as well. So we're going to keep all of those levels. Now, of course, that's just the lower time frame, right? That's, lower time frame swing. What if we have a break of structure to the downside? Well, if we don't come into this level first, let's say we do not come into here first. If we get a break, I will be looking for our higher time frame demand down here, because this could just be expansion, pullback, expansion up into that level. Okay. If we do come up into this level first, then I won't be looking to buy. Okay. Because for at least from this level, from our higher time frame, because we could potentially go short from that level. But anyways, so the reason why I have this level here is because this is where this higher time frame pullback stopped. This is our last selling volume before the structure broke. So could this just be an expansion, pullback, expansion? Yes. So if that's the case, I still have that level down in here in around 96.5. All right, so we can just see excuses to buy XXXJPY. Chef JPY, very similar. So we have higher time frame levels down in here. Very quickly discuss. Just we can see higher high, higher low, higher high. Higher low potential for a higher high. Objective is up in here. All right. So counter trend, low, high, low, high, low, high. Failed to make the lower low, higher high. So now this becomes the range. Well, really this is, but you can see this as a high, a low, a high, a low potentially, right? So we can see that this low right in here, I don't know if you can see that, it's scaling. See that wick took out all these lows, just by a little bit, but it's a liquidity run. And that's where this little counter trend stopped. Right, we had a low, high, low, high. We kind of failed here. This is really our last selling volume. We pushed up. Again, we came back into our last buying volume here, and again, we failed. So we could have made, low, high, low, something like that, but we didn't. So really, we're not looking for shorts from these levels. We're just seeing, in hindsight, where price stopped to make the higher high, right? Where did we reprice? Where did our last selling volume come into play? So these two levels are still valid from a higher time frame perspective if we break and have an overall retracement. But we're still maintaining a lower time frame bullish structure. So we can still look to play off of all these levels. That's why we say trade off, keep trading with the trend until it breaks. And then if we're still bullish higher time frame, wait for the overall retracement and then look to buy from the higher time frame levels. Right? So scale into a lower time frame here. What I really like about this is that, well, first and foremost, we're bullish. So structure, check. And then fake out of sell side liquidity, check. Mitigation of demand, check. Break of counter trend structure, check. Demand level, check. So we have a lot of confluences here. First and foremost, we have a head and shoulders. We faked out of the head and shoulders, we kind of pushed back up, and we faked out again, and we went long. Sweeping equal, well, really double equal lows. Okay, equal lows in here and equal lows right in here. We took the sell side liquidity and came up to the upside. I talked about the overall demand level here, the start. We had the reaction the previous Friday, so May 5th. And we closed right in here on Friday. So I said, okay, well, even though we reacted from the level, if you bought it here, probably not necessarily a good idea to just keep stops here. Why? Because if that's the case, this is Friday's low. We oftentimes sweep Friday's high and low in the direction of trend, right? So that could be a really good sell side liquidity run, taking out the previous week's low like we did and continue. And I said that verbatim pretty much on whenever the last live session was around that date. So I said that, we were likely to sweep sell side liquidity, previous week's low, and just come deeper into this demand. And we can see we had that hourly time frame imbalance that reacted very beautifully. So creating that deeper counter trend structure, you can see that this is supply, that previous last buying volume before the lower low was made, lower high, shorted off, failed to generate the lower low, and instead made the higher high. So this becomes that flip from supply to demand. So looking for that overall retracement into our level to look to buy it. And we have a lot of sell side liquidity. You can see that this trend line here, like 1, 2, 3, 4, 5 touches. I'm sure retail is buying in here. So obviously there's some sell side liquidity resting below that trend line. So it would be a good excuse to go run it, come into our demand and push higher. All right, Euro AUD and Euro NZD are very similar. So with Euro AUD, we are seeing some Aussie strength. So Aussie and New Zealand dollar strength as of late. So I really want to be continuing to look to sell Euro AUD, Euro NZD, GBP AUD, GBP NZD. So even though we are extremely bullish, right? We definitely are. We're in a higher time frame uptrend and we have relatively equal highs. Right? This high is likely to be taken out. I agree. I think we are going to go long. Now it's just a matter of when. And I think that if we are to go long, I think we need to come a little bit lower first into some demand levels. There's a lower time frame demand here. There's demand in here, demand in here. So I just don't think at this current time, this is going to be a low in the market. I think we're going to run lower first. But if we start to pull back, I think that we could potentially sell it into the demand before going long, right? Because we're currently in low, high, low, high. So some sort of counter trend pullback potentially. And so we go to the 1 hour time frame. You can see that this is the high that failed to generate the higher high. We made a lower low. So kind of we're pulling back on a higher time frame. 1 touch, 2, 3 touches of this trend line. We had the fake out enticing buyers, right? And then we just mitigated a prior level of supply. We went lower. So while that occurred, buy to sell, reprice, continue. We had another repricing event right in here with that little doji. So around 165 is where I have the psychological level. So I would like to see potentially, buy side liquidity run, all of this liquidity come up into, these 2 levels potentially, look to short off at least into these demands, and then just get in, get out, take profit down in here. No need to hold this first swing because we are very much higher time frame bullish. And then potentially we will be looking for long. So you can kind of mark off those levels around 6.1, 0.6, 5.9, areas of demand that we're looking for, but then potential areas of supply that we could short sell into those areas of demand. Very similar to Euro AUD is Euro NZD. And in this case, we have reacted from a higher time frame level of supply. I mean, we're definitely bullish, right? We're making higher highs and higher lows. We're sort of just finally seeing some relief. After this entire phase since last year, December, we've just been trickling and trickling and trickling and trickling, finally seeing some sort of relief. So we may get a deeper retracement. And what I'm hoping for is around 1.68. Because if we just pull a Fibonacci, then we have, we're currently sitting at the 50% now. I really want to get deeper down into discount. Right, getting deeper down into discount would open up the door for more higher time frame continuations if we are to continue long. Right, and I think 1.83 could definitely be on the table. But for right now, I think we're definitely going to be continuing short, at least for the short term. So short selling definitely appropriate. So we have a couple of levels. We have the lower time frame level, just a continuous structure, which is just right in here. Then we have our higher time frame zones if we have an overall retracement. So it's just a little tricky at this current time. We have equal lows, so I do fully expect us to continue short. I have our last buying volume in here just to keep supply very clean. You can see it better on the lower time frame, but that's a clear level of supply. Could pop up into that level, just continue with the structure. If we have an overall retracement, we could take out this high as a break, not a break of structure, more of like a buy side liquidity run. have an overall retracement into a couple of levels here of supply. It's not very pretty, so definitely be careful. But it's lining up with Euro AUD quite nicely. So any sort of pullback, I'd be looking to short. I'm not really favoring Euro NZD that well, but I'm monitoring these supply levels if price pulls back into them, but not a priority. Euro JPY, again, like we talked about, Japanese yen's very weak, looking for continuations to the upside. Higher time frame objective will be in and around 5,350, which I think on a weekly time frame, it's, I don't know why, looks like this, but really just this area of supply here, but then this imbalance. You can see the wick here and then really the wick here. So just straight selling volume in here. We haven't filled that imbalance entirely. So wanting to come a little bit higher into that 153.5, maybe 155. So definitely still following the higher time frame uptrend. We are above the weekly 50 EMA. The 50 EMA is just capping price to the upside. Daily 50 EMA, we're above. 4-hour 50 EMA, we're above as well. So we can see higher time frame structure is right in here. Expansion, pullback, expansion. So could we see a pullback for another expansion? Sure, right? If we get a retracement. But if we don't, we can continue with the lower time frames. So where is the higher time frame structure? Well, we just talked about it like low, high, potentially low, high, right? So this is one expansion. This could be one pullback. We can see in here that we had in the mitigation of a previous level of demand sweeping sell side liquidity. We kind of accumulated lower time frame. And then the counter trend here was broken. This is where it's important. So all these lower lows, lower highs, and then we failed to generate the lower low and expanded higher, making a higher high. So if we get an overall retracement, that is where I will be looking to buy from, right? The higher time frame expansionary move. Whoops. Let me try that again. Expansionary move, overall retracement, 142.2. Right, that would be that overall retracement. Now we can get medium-term pullbacks. If we have a break below this low, we could come into this previous level of demand here. So there's a repricing here and here on a lower time frame. So really just looking for just maybe semi-short-term pullbacks into that level. If we get an overall pullback, well, obviously this level here, but kind of short-term and long-term, I would just say. Now, of course, the lower time frame is still very much bullish. Right? We're making higher highs, higher lows. And what's interesting about this is that we've created the fake out of the head and shoulders. We had a shoulder, a head, and a shoulder here. Sort of a skewed head and shoulders. We faked out from it, and then we went long. Right? So attracting sellers below the breakout of the neckline. This is why stuff like this just doesn't work. And it makes no sense anyways. But then the counter trend, low, high, failed, higher, high. So I'm liking some sort of pullback into our demand, our last selling volume, to continue higher with the overall trend of the market. But obviously, if we get a break below it, then we'll have these levels down in here. When we have equal lows, that's a good sell side liquidity for us to go take. All right, that's Euro JPY. I think I have 18 pairs. So let's see, 1, 2, 3, 4, 5, 6, 7. Let me go over 2 more. Actually, I'll finish up with the pound pairs. So we have those next. Then I'll take some questions. All right, so with GBP Swiss franc, we talked about a few levels. So for one, we have higher time frame liquidity run, right? All this sell side liquidity run. We had a huge sell to buy. We came back down and mitigated a prior level of sponsorship. Filled imbalance, lower time frame. You guys can go look at that on your own. Just for the sake of time, I won't. But we mitigated that level of demand and that sponsored candle that swept liquidity and made a higher high. So that is where we came back down, had the reaction accumulated, and then the counter trend was broken to the upside. Low, higher high. So we can turn around, look to buy it, right? To continue with this overall trend of the market. And we have equal highs on a higher time frame. Equal highs here and this trend line liquidity. 1, 2, 3, 4 touches beautifully. So we know there's a lot of buy side liquidity resting above it. And I think that if we're going to go short, like higher time frame, I think that if we're going to go short, we probably need to come back up into premium anyways. And where's premium? Well, premium's right here. Just pull a fit, right? So we're sitting around the 61.8. I think that we can come up and potentially fill this imbalance. So even if we are to go short, I don't think that the short-term buys are done yet. I think we're going to continue. So with that being said, you're building confluence for some trades that you could be trading counter trend, right? So again, if this does go short, I'm really liking 1.1350, just getting back up into premium price. We haven't even reached that yet. We're definitely lower time frame bullish, so all signs are pointing to short-term longs, potentially leading into long-term longs if we end up making a higher high, which I actually do expect because we have higher time frame buy side liquidity. All right, so now let's scale into a lower time frame. Well, I guess we can stay on the 1 hour. But anyways, remember how we broke the structure here? We created that last selling volume, that level of demand. We came back down into it, had that beautiful trade from a few weeks ago. And then you just look at the counter trend again. Low, high, low, high. So we had that supply level, right? So we could have made a lower low just with this current counter trend. We came back up, tested. This is okay. So this is how this works in terms of flips. This is a supply level. We came back up. We tested it as supply, made a lower low, came back up, tested it as supply, failed to generate the lower low. So now this is no longer a valid supply level because we ended up making a higher high. Because if it was a valid supply, we would have made a lower low below the low. But instead we stopped, made a higher high, so that supply will turn into demand. So that's exactly why we bought price from that level. We bought it last week. So, well, actually this was 2 weeks ago. I think it was Thursday or Friday. Yeah, Friday. And then we went long, right? So stops are not at break even yet, just because we could sweep sell side liquidity, especially because we're building this channel here. So I would like to see some sort of buy to sell to buy, that type 2, or just type 1 sell to buy, right? Overall, I'm looking for longs. We could come back down, fill this imbalance, which would take out the trend line low, or really the channel low, and really these lows in here. So Friday, 2 Fridays ago, that previous week's low, that's what we could be looking for. And the stops would just go below this previous low here, because on a lower time frame, there was a wedge that we faked out from. This is a manipulative candle, sell to buy. So really, I don't think it's necessary to put stops below the overall low. I mean, you can, but I think that low is fine. So definitely we'll still be looking to buy from 1.1150. So that area of demand, because we could see that sell to buy. But even if you don't want to buy, if you want to be more conservative, what we could see is, if we do create that sell to buy, we could look to pull back and long it from there. So that could be definitely a good opportunity. So all eyes, what I'm trying to say is all eyes should be looking to long GBP Chef. Oh, gotta have my coffee. Anyways, GA, we had a beautiful reaction from our level of supply. So like we talked about on Euro AUD and Euro NZD, we're seeing that short-term Aussie New Zealand dollar strength. So naturally within our higher time frame bullish run on GA, GN, EA, and EN, we're seeing some sort of counter trend pullback, right? So we're kind of playing off the counter trend here, but we have confluence to do so. So we talked about how we go about trading counter trend. Well, for one, we have to treat each trade as its own, right? Every single solitary trade has to meet our rules. It has to have sufficient confluences. But when you're trading counter trend, you have to make sure you are aware of the higher time frame objective, right? So you can't just be trading counter trend with just a regular old setup, even if it meets your rules. Why? Because if let's just say this was a beautiful level of demand, it's really not just because we have sell side below here. Let's just say it was. Maybe let's just say that we went like this. We created equal lows. We created a sell to buy, and then price came back down, mitigated it, and went long, right? So we created equal lows, mitigated demand, sell to buy, mitigated that sponsor candle, and then went long into a previous level of supply here. And then, why would we not look to short that? We wouldn't look to short it because we already mitigated the objective. There'd be no reason for price to go any lower. We would likely just continue long, right? Because the objective was met. But in this case, the objective has not been met yet. Because if we just take a look at it from just a regular structure standpoint, higher high, higher low, higher high. So we naturally expect a higher low, right? So where would that higher low likely come into? Well, what do we always say? Look at the counter trend. Low, high, low, high, low, high, kind of just consolidating. This is really our last selling volume right in here, this area of consolidation or demand. So we haven't come back down into that yet. As you can see, we've actually created equal lows. So that just tells us that the counter trend is still likely to continue. right? We're still likely to push lower because we haven't met objective. We could easily come lower into 8,350 to sweep this trend line liquidity and mitigate this level of demand here that's unmitigated to fill some more imbalance, because this swept equal lows, sell to buy, reprice, continue. We never had that mitigation of that level yet. So potentially two levels that we could come into first. So the counter trend is definitely still valid. So we looked at this as like a, maybe I can go to the 30-minute, look better. Yeah, maybe not. Oh, well, whatever. So we had this low here. Obviously, like I said on Wednesday's live session, I was not looking to short it from here because why? I mean, we're in a bullish market. You would naturally expect a higher high. This is all, remember, this is all hindsight. This is just building confluences. So we ended up coming into this inside supply. You guys have taken our course. You would know inside and outside supply and demand. Came inside supply. So we came into that level, made a low, failed to generate the higher high, and then made another lower low in the market. But we did not come into that objective. So this becomes our supply zone. And we can see that this wick in here actually filled the imbalance on a lower time frame. So that becomes supply. And then from a higher time frame perspective, we have our low, we have our high, we have our low. Overall retracement. So we can see that this is a huge buy to sell. So this is really where the buying volume started, 881. And that's where we had our short. So it had a beautiful reaction. So let's take a look at the counter trend. High, low, high, low, high, low, high, low, high, low. Failed to generate the higher high, lower low. So we could see one of two things. We could see that this is an overall level of supply, but you don't want to be placing, I mean, there's really no area to be placing it in here. I mean, you would just look at sort of this level here. This sort of like triple doji repricing, just getting back up into premium for shorts, right? So low, high, low, high, low. That could be an opportunity to start the week. However, we have to understand this is Thursday and Wednesday's high. So the previous week's high could actually be run out. We could run that high before continuing. Now, why is that the case? Well, we don't know if that's going to be the case. We could easily just come up into that supply level just to continue with the structure, because we did mitigate that level. We had a reaction from it. So we could easily just continue lower, right? But if it does run the previous week's high, it's still bearish in my opinion because, well, we haven't reached objective. And two, we could just push up deeper into this level of supply, right? So really this was like the overall last buying volume here. This is really where that push started. But then we had on a lower time frame that little repricing event here. So could price come up a little bit further, sweep everyone who was looking to sell this past week out of the market, come up into that level, just deeper up into this previous supply before continuing. It's still following the structure, right? Lower low, lower high, lower low. That could be a case, right? So you could have two potential entries on half risk, maybe half risk here, right? Obviously not here, because why would we stop at the exact same spot we stopped before? We have already mitigated it. So it's either one of two things. Either we just continue with the lower time frame, or we have an overall retracement to take previous week's high to have that excuse of just continuing, just deeper up into that supply level. And you could kind of pair that with, I think it was Chef JPY. Yeah, you can pair that with Chef JPY, right? We came into the level initially, just like on GCAT, or what was it, GA? Something like that, whatever I was talking about before. We came into that level initially on a Friday, and then we ran the previous week's low, just coming deeper into the demand, sweeping sell side and continuing long. So that's something we could definitely see here on GA for sure, potentially. All right, quickly before I forget, this just came to my mind. Let me check to see. Okay, yeah, I apologize, guys. I didn't see that this wasn't full screen. There we go. I don't know why that popped in my head, but I'm glad it did. All right, continuing. All right, so GBP NZD, very similar, I would say. I mean, we're still looking for shorts. NZD, Aussie dollar, very strong at the moment. So we can see 4-hour time frame. Even though we are still very much bullish, I think we're going to run this high at some point. We're sort of starting this counter trend pullback. So we're starting to make lower lows and lower highs in the market. So The counter trend here, or the overall trend here has been broken. All right, that was terrible. This trend has been broken, all the lower time frame stuff. We started to now trend to the downside, right? We're starting to push lower. So I do think that we're going to come lower. I don't think that we're going to make a lower low. We're not in a bearish market, but at least maybe back down into discount from a higher time frame perspective, just because eventually, that's how structure works, right? The lower time frame will eventually break. And that doesn't mean we're just to go bearish higher time frame. It just means that the higher time frame retracement will come into play before continuations occur. I mean, same thing in here. If you were to zoom in, you could classify this as higher time frame, right? You would see this as, oh, high, low, oh, we failed, lower low, but this is not a break of structure to the downside. This is just an overall retracement to make a higher high. It's just applying the same principles on this lower time frame, but just on the higher time frame here. Same principles. So, right in here, 1.94 psychological low. Well, this is where this previous high was, the last selling volume, really, before the overall uptrend. So just getting back down into discount. I mean, we could come lower, potentially into the real last selling volume in here around 9.2. That's a possibility. We'll just do that, 9.2. But anyways, we swept this high, you can see, and now we're starting a retracement. So I fully expect us to continue short for the short term. Okay. So what's going on in here? We talked about, well, two levels. One of them was actually on Wednesday's live a few days ago. We talked about this level in here, but then the prior week we talked about this level. So let's just kind of look at the structure in here. So low, high, low. Now, was I looking to sell from here? No. Why? Because we're in an uptrend, and this could just be a sell side liquidity run for continuations, just as we talked about with AJ in the very first pair this morning, right? So I said, what did I say afterwards? I said that if we are to go short, we can't classify this as a break of structure yet because we're still bullish, right? We can't be so quick to judge it. Wait for the failure to make a higher high and the lower low. Now we can look to pull back and short it, which is exactly why we did. So it's following the plan over and over and over again. And that's it. Trading is definitely a very boring job, right? Because it's repeating the same thing over and over. So in hindsight, we came into supply. And then as we failed to generate the higher high and made the lower low, we had an area of supply in here. Right? It's just that repricing on a lower time frame. So we initially broke the low here, and I was looking for the pullback. We never got it. And most people would be like, oh, darn, like, all right, I'm going to move on. We didn't get the pullback. Or what they would do is they would look to just sell it when price is falling, right? Because it failed to come up into it. Now price is falling and falling and falling and falling. Now they have FOMO and think they're going to miss out on this opportunity, and they sell it. And then price ends up continuing long and takes out their stop most likely and comes up into the actual level. This is why patience is so important. And this is also why understanding how the financial markets work will help you to not lose as many trades, because psychology really does take over. But if you understand how any financial market works in regards to liquidity, we know that just because we didn't come up into it first, I'm looking at this as buy side liquidity. And what happened? One touch of the trend line, 2 touches, 3 touches, we can see price start to fall. I'm like, this is setting up beautifully. If we can just have a break and overall pullback, huge buy to sell, right? So this was used as the excuse to create the liquidity, to sweep it, to mitigate the supply and roll over, okay? Many people would be also afraid of the extreme volatility and the extreme momentum coming up into that level. Well, at the end of the day, a level is valid or invalid. Like it's either valid or invalid. It's either going to work out or it's not, regardless of the momentum, right? It doesn't matter how fast or slow or backwards or in a spiral motion it comes into it. Doesn't matter. If this is a valid supply, it would react. If it's not a valid supply, then it would go long. That's simple. So just based upon the confluences, this is a valid level of supply, which is why we stopped here and went short. So I said on Wednesday's live, I'm like, okay, because price was in here. This was Wednesday. I said that we failed to generate the higher high and then started to trend down, right? We kind of consolidated and then fell again. So Wednesday, I'm like, okay, well, we could be looking to take a trade from this area of supply. That's exactly what happened. Price came into it, kind of consolidated, and then we rolled over. So now what we could do is look at this buying volume to look at trades from to continue short. That's definitely a possibility. However, what happened? We made a lower low. So now this becomes the new range. So could we have an overall retracement before continuing? Possibly. So the lower time frame could work out. We could react off just lower time frame supply and continue, right? Or we could have some sort of overall retracement before continuing. I have no idea. So you just have to be careful. So what you could do, if you wanted to just look, how would you go about trading this? Well, really, there's no clear level of higher time frame supply up in here. Now, if there was like a clear, like, I don't know, repricing, and then, you know, we went like this and we took a trade off that, and then price made the lower low, we could trade off this level, or we could wait for the overall pullback into our higher time frame repricing and go short. But there's nothing that clear right now. So I'm probably going to be sitting on my hands with this pair. I don't want to force anything. And you could look to trade that, or really what you could do is just place your entry here, stop loss above the high, right above the high, place your secondary entry short, and then your stop could probably just go above that high. I know it'd be a big stop loss, but we're looking for overall continuations down into 9.4. So this would be a relatively higher time frame trade. And still, even if you were to do something like that, because why would you do that? Because pretty much if you get into this position, you're almost guaranteed to make money if price doesn't break structure back to the upside. Why? Because you're getting out and then getting back in again if this supply level doesn't work. And at that point, you would get in again for the overall retracement that price can come up into, whether it be here, 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 up in here. Stops are above the high and you still be safe if price ended up rolling over. So in this case, you'd have 1 to 4, potentially a 1 to 6. So that still meets my rules in terms of risk to reward, just based upon my average win rate, right? So this is a 1 to 4.5 almost, and then this is like a almost a 1 to 6. So again, that would be a solid trade in my opinion. So that's kind of how I would look at it if I was looking to do something like that. All right, let's take some questions if you guys have any. Sorry guys, I know I sound a little off today, just not feeling the best. So I'm keeping my camera off. I look like a toad, as I'm sure we all do in the morning sometimes. All right, let's see where we're at. Let's see. This is a really good question, guys. What did you improve in your strategy in the past 1 to 2 years thanks to your experience? I think really what I've improved significantly, even after becoming profitable, was being more selective, was working on my psychology. Psychology is the biggest killer, right? So being more selective, not being afraid, but being more selective in regards to my setups and understanding that I don't always have to be in a trade every day. Making sure all of my rules are met every single time. Definitely very important. You'll come to understand that, through years of failure, you'll realize that, okay, what am I doing wrong that's consistently making me fail every single day? And you'll finally realize that all these little trades that you really, really want to get into that maybe don't look the best, but you think it's good enough to trade and you just do it anyways, and then you see failure, you'll finally come to realize that you shouldn't be doing it, in the sense that you have to just wait for that perfect setup to come around. Perfect setup meaning like not necessarily like the holy grail once a year type of strategy or type of trade, but more along the lines of just following a trading plan. And through experience, you'll come to see certain setups that just tend to play out more than others, like similar looking setups. So something like, for instance, GBP Swiss franc that we went over, that in my opinion was really, really good. And then the Canadian dollar Japanese yen trade, and then the GBP AUD trade was good. That was a setup that looked really, really good. What else was there? Let me just go check. It was Canadian dollar, CAD J from a few weeks ago. That was very beautiful. Oh, and then the Chef J one. The Chef J one that I just went over. If we get a retracement into that level, that just based upon 6 years of trading experience, that looking type of setup, how it looks, just tends to play out. And it's really just an intuition thing, right? Over time, you start to gain intuition in the market. That's why sometimes when people ask me questions, whether it be a yes or no question or whatnot, sometimes I'll just say yes or no, but it's hard for me to explain, but I just know it's a yes or no, right? Just because it's like the intuitive feeling that you have, but it's sometimes hard to explain it. It really just comes down to a trading plan. You have to have a trading plan. You have to have a set of rules and following that every time. It's the discipline factor that hurts a lot of people, because most people in this world are not disciplined. That's why most people in this world are broke. I mean, you interview 100 multimillionaires or billionaires, you're going to find very, very similar characteristics in their work ethic, in their discipline, and their persistence. So, I mean, it's really a requirement of becoming successful. It's not a recommendation. So, good question. It might be a good YouTube video for me to create. Something I can go more in depth about. So, yeah, thanks for that question. Do you leave limit orders open or place them Sunday night pre-London, or do you wait for New York? That's a good question, Brian. It depends on the setup, right? I think if it's a beautiful setup that could, for instance, like Chef JPY that I just went over, that Chef JPY example, if price was relatively near that entry, I probably would place a limit order. But, again, it's all dependent upon the setup. I would preferably like to just wait until London, New York session, especially if it's like, how do I explain this further? You know what? Not to confuse you. What I would do, just as sort of like a rule of thumb, is if you have a setup coming into the next week and you have an area of interest, go ahead and place the limit order. It would just make sense, because if it's a valid level, then it's going to react. Just like I talked about on GA, right? Or maybe it was another pair. If it's a valid level, it's a valid level. Time of day is definitely very important as well. You'd like to see mitigations occur, especially on the lower time frames. If you're looking at like, the 1 hour or lower, preferably like 15-minute or lower, you really want to see those moves happen at the right time of day. So London, New York session for the lower time frames, definitely you want to keep, you want to wait for those sessions, right? But the higher time frame, like, Chef JPY is a 1 hour time frame / 4 hour time frame area. It's just a higher time frame supplier demand level. That's not necessarily you have to wait for the right time of day, just because it's just a general overall level of the market that it might come into it during, Asian session, and then might chop around. And then within that higher time frame supply and demand on a lower time frame could have that London session manipulation and continuation. So all the noise that occurs throughout, it's not really affecting you. So here's what I mean by that. I'll just share my screen really fast. This is sort of just like a general broad level, right? So this is like, okay, if it comes into Asian session, let's say it hits an Asian session. It can do this in Asian session. London session could go like this, sell to buy. Well, it had the sell to buy during London, but it didn't affect my trade because it's just within the general overall level. So usually if it's the higher time frame level, yeah, I would just keep it throughout the day, over the weekend, don't care when it hits. But with the lower time frame opportunity, if we're going down to like the 15-minute and we see, equal highs, equal lows in Asian session, and we're looking at a buy to sell to buy, and there's a clear level, let's just say a clear level of demand here on a lower time frame, like the 15-minute, and price is coming into it at like 3 in the afternoon or almost like market closure, like before Asian session, yeah, it's probably not the best to keep it open, because these types of setups on the lower time frame, these are going to be the session specific, right? Because it's happening so quickly, you're going to want to see the reaction at the right time of day. And if it's not, then it's probably not worth it. But the higher time frame trades, if you have like a general 1 hour or 4 hour level, like especially these levels down in here, or maybe like, where was it? Maybe it was EJ. No, I think I talked. Anyways, like the higher time frame levels, you could just leave, right? Because It's not really session specific, if that makes sense. Let's see what else we have. There's a couple more minutes and I'll get right back into the charts. You can see that following your breakdown of how you see the markets, you won't get affected by seasonalities. You just manage your risk, analyze your losses. Yeah. I mean, you can, obviously everyone probably has seen 2023's price action has been insanely different than we've ever experienced. So we have to be able to adapt. So the markets are ever changing. They're never going to be the same. Obviously, smart money and the way that order flow works will be the same. The logic behind it will always be the same. It may look different over time, which is why these retail traders think that smart money is going to be the new retail. They just don't understand how trading works and how the financial markets work, which is, it's understandable. They're new. Hopefully they'll come to learn later, but the logic behind the interaction between buyers and sellers and the order book of institutions trading billions and trillions of dollars, that will always remain the same, right? Like I said, it's going to probably look different over time, but it's always the logic behind it. The underlying nature will always be the same. So that smart money is not going anywhere. It's just maybe a different look of it potentially. But for me, I'm just following what I always know, right? Because I'm still successful. I've been successful since really 2020, or really 2019. So price from 2019 is completely different than 2023, but I'm still successful. So it's different in the way that the markets present itself sometimes, but the logic is still the same. So you're just applying the same principles, right? That's really it. So it's all just about managing risk, managing psychology, and just waiting for your setup to happen. I'm sure you guys have taken beautiful setups and you're like, wow, that was just a gorgeous setup. You know, those types of setups, work. Just have the patience just to wait for those. Just build confluence. There's no need to trade every single day, every single session, every single week. It's just, you don't need it. You only trade when a setup presents itself. So yeah, I mean, it just comes down to managing risk. That's it. All right. Who is good at teaching the supply and demand concept? Well, I think you've asked that question a couple times. I'm not really sure how to answer that question. If you don't like the way that I break down supply and demand here on the charts, then I'm sure there's probably other supply and demand mentors out there who could probably point you in the right direction. I'm not really sure how to answer that. But anyways, let's continue. We have a couple more pairs to go over. Let me just share my screen here. I'm going to make sure I'm in full view. Okay, I'm in full view. Perfect. Oh, sorry, guys. Anyways, NU. NU is very interesting, and it's a little confusing to me, but it still makes sense to me. It's not my typical looking setup, but the concepts behind it are still the same. So with NZD USD, even if, and this is why I want price to come short before long, even if we are to go short, right? First and foremost, we're in a bullish market, but we have, swept liquidity. We have made a lower low. Could we continue with an overall pullback before going long? Possibility, right? So even if we are to go short, I still think that counter trend long opportunities are still valid. Why? Because we came into a level of demand. We failed to generate the lower low. We've made a higher high, but also at the same time, we've created equal highs. We also have a lot of imbalance up here in this huge supply level to be mitigated. So I think short term, we should see 1 drive, 2 drive, 3 drive before potentially falling if we are to fall. If not, it'll just continue. So who knows? I still think that short-term longs are on the table. So you can see that there's a level of imbalance, a level of demand down in here. I wasn't looking to buy it just because at this time we broke it. We've broken the low and we're making lower lows and lower highs. So I fully expected just to continue with the trend. But in this case, we stopped, we accumulated, and we went long. So now I think that if price is going to go short, like I said, we should probably push up into these sort of levels, take out buy side liquidity into imbalance, maybe back up into supply. So on the 1 hour time frame, you can see the accumulation, and we can see that this is the level of interest, right? Really, this is the last selling volume, right? We had our low, we had our high, low, high, low. Demand level was met. That's why we failed to generate the lower low, and instead we made the higher high. In this case, last selling volume, or really just this doji candle right in there, is really good. So that's what I'm waiting for price to come into. So what we're doing now is sort of forming, as you can call it, this retail trend line, kind of, potentially, from a 4 hour perspective, or maybe even trend line like this. You can see in here, we have one touch. Well, let me try to make this more pretty. 1, 2, 3, 4 touches. So now we know sell side is resting below here. So I would like to see, come next week or just within the next couple of weeks, some sort of sell to buy into that level. Take sell side, come into that demand, rise up into our level, and then do what it wants to do afterwards. But I think that's a good opportunity on NZD USD. I'm liking how it's forming and putting itself together. So that's NU. UCAD, I like shorts on UCAD. Overall, it's tough because we still are consolidating on a higher time frame. We're not trending. That's obvious. I mean, on the higher time frame, yeah, we're making a bullish uptrend. But at this current time, we've been in a consolidation period since September of last year, right? So for over 6 months now, we've just been chop, 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 chop. But what I will tell you is that from the daily perspective, I think that we are to continue long because first and foremost, we have equal highs. Secondly, 1.321 is a prior level of like this is a demand level in here. We can see that usually with demand, we have some sort of retest of it, right? We have equal lows in here. We never came down and tested this as support of any kind, right? So this level of demand we had not mitigated yet. We have equal lows, and then we have 1 touch, 2, 3, 4, 5 touches of this trend line. So we know there's a lot of sell side liquidity. So I want to see short-term selling before continuing long. And because we're in an uptrend, you would just have to naturally expect that. Like I said before, if we're in an uptrend and we're going to go long overall, if that's the consensus, then what do we know about how the markets work in terms of manipulation? If we're going to go long, we should probably have some sort of move like that, some sort of volatile move in the opposite direction, taking everyone out of the market before continuing to go in the overall direction, right? We have a lot of sell side liquidity, so I want to see continued shorts. And I talked about this level here. I don't know if you recall from the beginning of May. I think this was actually our first live session coming back in May. We talked about in here. Let me go over kind of what's going on here first. So overall, we're counter trend bearish, right? We're in a counter trend downtrend, as we can see, right? So currently the trend is bearish, and we're looking for continuation short to take sell side liquidity before potentially coming higher. So definitely the bias is short. So in here, there's an area of supply that we came into. So let's keep that in the back of our minds. 1, 2, 3, 4, 5, 6 or 7 touches of this trend line, enticing traders long above the breakout and then taking their stops as we fall. Everyone who is shorting with this trend line resistance got stopped out upon the breakout. So when we had that breakout, we had the retest as well, right? Break and retest. Everyone started to go long. Everyone started to go long, and then it rolled over again. We can just see how retail is being screwed left and right. If we scale in even further, what we'll see is when we broke and retested this, we created buy side and sell side liquidity. We swept sell side first, right? 9 a.m. Eastern time, Thursday, March 23rd. New York session open, sweeping all of London and Asians price action for the past week, right? It's pretty much all the prior week's price action to swept, enticing sellers below the breakout of this support. So they're stuck short. Everyone who was buying with the support got stopped out as well. We went long, stopped out everyone who was selling below the breakout. Again, right in here, 1, 2, 3, 4 touches, breakout above it, enticing buyers above the breakout, rolling over, taking their stops. Anyone who was selling with this trend line resistance got stopped out above the breakout. Imbalance and supply was mitigated with this move. rolled over to the downside. So that type 2 manipulation, sell to buy to sell. So now that's on a lower time frame perspective. This was the higher. I'll just draw it out. I'll just extend the trend line. This is essentially the break and retest, the failure, and then the continuation. So now higher and lower time frame are bullish. Now we can see that. So where could we potentially come up into? Well, we had this level of repricing right here, right? So in and around that 3,650 level. But I'm like, okay, well, could we come higher and not just react off that level, but maybe dig a little deeper up into here potentially? So that's why I had this level at 1.37, psychological level, 1.37000. So obviously we can see we never came up into that, but we came up into that level I had drawn originally. So again, all of this was just straight buy side liquidity, 1, 2, 3 touches, and then we ran the high. Right? It's all just building liquidity and sweeping stops and mitigating orders and all that stuff. So anyways, we come up into that level initially and we create buy side and sell side liquidity. Same type of thing occurred here as it did way over to the left. We had the breakout. This is the Asian session at this time. It's Asian session low. We had the breakout in New York and then the continuation. So enticing retail shorts below the low, run the highs, so run the stops, and enticing retail buys above the high, and then running their stops. So that type 2 again, sell to buy to sell, shaking people out of the market before continuations. So that's when Friday rolled around. This was Friday's high right here. So that's why I had the higher time frame level at 137, because overall, this is our level of supply. So like I said before on these other pairs, since this is Friday's high, could we run the high, come deeper into this supply before continuing short? Potentially, yeah, that's definitely an option, because until we break this high right here, we're still bearish. So even if we were to run this out and come higher, we still haven't broken structure yet. It's just digging deeper into the supply level. So we ended up stopping because I had a couple of levels. I had that level up here, but I also had a level right here, 1.3620, and I think I also had one right here as well. Just the overall last buy to sell. Because of the type 2 manipulation that we saw on Friday, I like these levels in there. And we ended up, I think, what was that, Monday? So this was Friday, Sunday. So this was Monday's high. We started to push down, right? And then we took Monday's high on Tuesday into Wednesday, and we rolled over for the rest of the week. So that was that week's price action. We ended up rolling over to the downside, and then we came back down into this trend line support. So now what we're doing is we're pulling back. We have our level of supply in here. Okay, so that's something I would be looking for. This channel, 1, 2, 3, 4, 5 touches, 1, 2, 3, 4 touches. I would like to see some sort of fake out, whether that be like a sell to buy to sell or just a buy to sell. So enticing retail of some kind, maybe faking out of the channel, enticing people to go long, coming into supply, and then reacting short, and then looking to trade down into our 321 level. So we could see potential, something like this. Fake out, mitigation, lower low, pull back, entry short, take profit. 321. That's how I would look at USD CAD. Now, when I sell it here, this is not a very clear supply, so I'm probably not going to sell it. This is why I'm looking for the reaction, the break of structure, pull back, and entry right there, right? Because what could happen is, could we have just an overall retracement, sweeping liquidity, coming up deeper into this level, 137, and then rolling over before we go short to 1.321? Potentially, yes. So that's just why I'm just going to be waiting at this current time. USD Swiss franc. You can see how we're seeing, dollar weakness, right? We're looking for potentially GU longs. We're looking for NU longs. We're looking for UCAD shorts, looking for USD Chef shorts. But anyways, USD Chef, we have a higher time frame level that we haven't come into yet. This previous low, right? 875 essentially. So I do think that, we're below the daily 50, below the 4-hour 50. We're in a downtrend. We're so close to this previous low. I think we're just going to run it, taking sell side liquidity. That's probably the objective. That's going to happen, right? So we just came into that daily 50 and we've pulled back into structure. So you can see here, supply, mitigated, supply, mitigated, supply, mitigated, supply, mitigated, supply. Now we've mitigated it. Right? However, we haven't broken the counter trend yet. And this was Friday's high, remember, or Thursday's high, so the previous week's high. So could we go run it deeper up into here? So this is like the imbalance on the lower time frame. I'll just scale in, and it's also within this supply zone. There's like a little doji repricing candle. So that's a lower time frame level of supply, right? We had the equal highs, so we ran it buy to sell, mitigated that supply, reprice, continue. So this is really, this black line I have drawn here, it's really just the overall last buying volume before the sell-off, right? So that was just a higher time frame level. So we came into that, had the reaction, but we're still counter trend bullish. So could we run the high one more time to start the week, taking previous week's price action and liquidity, coming deeper into that level before shorting? That's a possibility, right? So really what we did do, we swept all that liquidity, right? 1, 2, 3 touches of that trend line. Retail was definitely shorting probably from there. Then what happened? Well, we broke, potentially retest, maybe price goes long, right? The break and retest traders, they're in a little profit, and then boom, right back to the downside, and they lose. Or this is the actual high of the market, and price just opens up. We see the break and retest, and then it just rolls over. That's a potential. So anyways, I'm not trading this as of right now whatsoever. We have 1, 2, 3, 4, 5 touches of this trend line. We know that there's retail stops below these lows. So we totally understand sell side liquidity. We're going to run short most likely. What I would like to see if some kind of, just some sort of maybe, liquidity run to the upside and then a fall and then look for the pullback to short, or maybe just be patient and wait for a run to the high and before shorting off. I'm going to sit on my hands to start the week with this. But overall, my goal here is to just let you know the sell side liquidity. There's the objective down in here, the higher time frame low. We have a little lower time frame level of supply. Overall, the bias is short. It's just finding the right setup throughout the week. And Chef, same sort of deal. I think we can run a little bit higher before running short. You see we have 1, 2, 3, 4 touches of this trend line. So we're definitely probably going to take out sell side. Also at the same time, we're bearish. We're in a higher time frame downtrend. I mean, why would we look to long it? I mean, if we're bearish, why long it, right? 5-3, higher time frame objective, previous low. I do think that we're going to run into it. So all signs are pointing to shorts. We're having an overall retracement now. You can see that with the structure. Liquidity run, so lower low, lower high. Sweeping liquidity, buy to sell. Overall pullback, lower high, lower low. This is the previous supply level. And I think that's where we're pulling back up into before shorting off again. So let's take a look at what's going on in here on the 1 hour. The previous level of supply. We had a little bit of a repricing. Price pulled back up into it. Liquidity, last buy to sell, and then we made the lower low, right? So this was the real move that occurred, the real manipulation. Just came up a little further into that supply, just still following the structure. I love trading in Chef. It's just so easy, so fun. Liquidity run, huge buy to sell. This happened during news. So news, of course, is not random. That was the excuse to sweep liquidity, mitigate this further, and then continue. We repriced twice, lower time frame repricing, and then that's sort of that last buying volume there before the rollover started. Okay, so those two levels of supply were our higher time frame levels. So we made the lower low. So overall, when we have an overall pullback, that would likely be regions in which we'd like to short from, right? So now we're having the pullback, high, low, high, low. We have relatively equal highs. I do think we're going to run it one more time before going short. But 5-7 is definitely on the table. 5-7 would be that first entry. And that's the start of that supply. Very good confluence when psychological levels line up with our levels of interest. So those two levels, that's where I'm looking to be shorting from to roll over to continue with the higher time frame trend. Now, if we do break to the upside, then we'll just reevaluate at a later time and just see what happens. Because we do have a lot of sell side liquidity, right? The institutions aren't going to leave, they're not going to leave a trend line like this. And when I say not leave a trend line, they're not actually looking at this as a trend line. Within their order books, they know that retail is probably buying, and it's reflective in the price charts because we have a trend line. That's what I meant by that. They don't know that this is a trend line, but they know that there's liquidity resting below it because of the trend line that's naturally being shown within the price chart and how retail is likely reacting from this. So orders are here, orders are here, orders are here. That's what I meant by that. So that's why you don't really see this type of price action in regards to like a retail trend line, just as a when price breaks structure and it goes long. You don't really leave that. You really sweep it and then potentially go long. That's what I kind of meant to say with that. Anyways, a couple more. Oh, GJ, I really don't have, this may not work out for a couple weeks. Who knows? May not work out at all. It's really just here. It's really a higher time frame trade. So I have a lot of risk to rewards here, all up into 180. That's our higher time frame objective. We're above the daily 50, as you can see. We're making higher highs and higher lows. We had a huge sell side liquidity run, equal lows. That low took it out. It's by a few pips. Ran all the liquidity, and then we repriced, and then we're continuing, right? So definitely signs are to the upside. Last buying volume here, 180. That's probably where we're headed. That's our objective. So lower time frame. High, low, sort of high. And then we could be having an overall pullback for a higher low, for a higher high. Yeah, possibly. So that's the higher time frame trend, which is why we have these repricing events here. There's a lower time frame one right there. This is where the pullback stopped. Demand. So those two levels of demand, if we get an overall retracement, because it would be expansion, pullback, expansion. So that's the higher time frame, right? That's why we have these two levels. Now, what are these two levels? These two levels here are where we, on a lower time frame, created our little mini, I wouldn't say head and shoulders, but like 1, 2, 3 touches. Well, really, you could extend it like that. Just sell side liquidity. We ran it and then continued. So we had a little bit of a repricing our last selling volume here that was never actually mitigated. We actually created equal lows that have not been run out yet. So that's why if price comes lower, just zoom out a little bit. If price comes lower, we could sweep sell side liquidity, mitigate that demand, and continue long. So 2 entries, both on half risk. One stop loss is going to be below the overall demand right here, and then one below the overall low, right? Because this is the low that it created the expansion, right? And of course, if we break through that, then we have our higher time frame zones down there. It's all just based upon probabilities. Right? But now, that would require us to come lower than this. Well, what if we just continue with the lower time frame trend right here? Low, high, and then, we sort of have an overall pullback and higher high. Well, we have a level of demand in here. And this is where I try to stay away from price. If price was right in here, right, would I look to buy it right there? Probably not. Why? Because we have equal lows. Same thing when people ask me the question of, we sweep, maybe there's a high here, we sweep equal highs and then fall, but we create more equal highs. Would I look to sell it off a pullback? No. Why? Because there's more liquidity above it. So the same sort of deal here. We created a demand and a higher high, but would I buy it off the demand? Probably not, because we have equal lows below it. I would fully expect us to run it like that before going long, right? So that's because sort of what I see here. We have relatively equal lows here. I would like to see some sort of reaction from this level. So I'm not going to place a buy limit, but if we get a reaction and the counter trend break like this, I will be looking to play it off of that. I need to see more proof first. I need to see a full-on reaction to tell me that this is an actual valid level. So if we get something like this, then I'll be looking to buy it like such. But I'm not going to be placing a buy limit. I would be waiting to see, because likely what price could do is if we get a deeper pullback, come down and sweep sell side into that level. So if you wanted to, you could place buy limits here, and here, because those are valid levels. But here I would need to wait for some sort of like liquidity run, sell to buy, reaction from the level, counter trend break, pull back long. That's what I would want to see, just because of the fact that we didn't mitigate this level. We never had any sell to buy repricing that would create that demand in the first place. If that actually happened, then yeah, there would be no need to come lower than this. So that's when I would just place a buy limit. Right? But we didn't. We have equal lows. So that could be the excuse to finally run them at some point and go long. Who knows? So that's how I would play that. Again, this may not work out for a few weeks. I just figured I'd show you so you can mark it off and keep track of it over time. UJ, same sort of deal. We were originally looking for, just because we've been following the mitigation train here the whole entire time. So congrats if you've been keeping up with UJ. It's been an awesome experience making a ton of money with UJ. But anyways, I'm not going to go over all the areas of supply and demand here. I mean, I've talked about this a lot. Really, we're continuing to look for buys, right? XXXJPY is in a bullish uptrend. I want to continue to look for buys here. So the most recent price actions, what we talked about in here, I talked about the fact that we created a channel, right? We came into there's a 45 minutes sponsored move, or really repricing. We made a higher high, right? But we created this channel here. So I'm thinking, okay, well, are we going to respond off the demand of the channel? Because that would be like a break and retest of the breakout of the channel. So I'm thinking, could we run lower to take sell side liquidity? So anyone who was trying to like buy above the breakout, they got stopped out as price came lower. Anyone who's trying to buy off the break and retest would get stopped out because we went a little bit lower. So I thought maybe a potential sell side liquidity run before continuing could be in order. So deeper into like that demand or something. That's what I was looking for. But of course, we didn't do that. We ended up coming down into really our level of, I'll kind of go over this. So when we had that 45 minute, best seen on the 45, but there's like a little doji candle that reacted off the prior level of supply, which is why we flipped from supply to demand when we broke this counter trend, right? This is the pullback. Came up into our last point of supply, failed to make the lower low, higher high. That's why we had the mitigation of that level over here to the T. And then that's where we started the uptrend again. Sell to buy, sell side liquidity run, sell to buy into that level mitigated. We had an imbalance, came back down into it, sell to buy, just lower time frame stuff. Creating a channel, 1, 2, 3 touches, 1, 2, 3 touches, enticing buyers, taking their stops, enticing sellers, enticing, and then going long and taking their stops. So buyers are the true winners here. And that's why it's so important to understand supply and demand, smart money, and structure in regards to stupid old, patterns. But anyways, we came back down. You can see these wicks. Now, why do I have a box drawn on with these wicks? Well, what is a wick? If a wick is to the downside, what does that mean? That means selling and buying at once, right? Within this candle, within that particular hour, we had selling volume that pushed price down. And then within the same hour, we pushed back up, creating the wick. So there's some sort of sell to buy on the lower time frame. And if you go to like the 1 minute, you can't even find it. So this must have been news, right? Some sort of news event. So created the excuse to sweep liquidity below the channel low, mitigate a prior wick here or sponsored candle on a lower time frame. So we ended up coming back down into it and having a reaction. Previous supply was mitigated, lower low, so that's valid. Previous supply was mitigated, failed to make the lower low, higher high, invalid. This becomes supply to demand flip, especially because we had the reaction off the level of interest. Right? So that's how we can kind of see when lower time frame is starting to shift. We create another channel. So again, you could buy it right here because I thought that, okay, great, cool. The fake out of the channel low and then long. Or some sort of buy, enticing buyers above the channel high, low, taking their stops, enticing sells below the channel low, running their stops and going long. Overall, we're bullish, right? We're just looking for some sort of excuse to buy. So anyways, we come into it initially. We start to push up. And what does this look like to you? Break and retest. Short off. Nope. Back to the upside. So retail is probably looking at selling upon the break and retest of this channel. And they just don't understand trading. So that's why they lose. Price ends up stopping here. Well, why? Well, ends up being a 1 hour imbalance. So beautiful mitigation, continuation. So we ended up making a higher high. So essentially you could classify this as a low, overall pullback, failure, higher high. So this becomes your overall demand level. Or you could say like, oh, this is your last selling volume there. Why do I have my line right here? Well, 2 reasons. Well, 3 reasons. 1, it's discount below the equal lows. 2, it's within the imbalance of this move. And 3, it's a psychological level. Could I put it here? Yeah, I could. But 135 is so close to this last selling volume anyways, so I might as well just put it at 135, right? So I was hoping that right in here, we would get that pull back into 135 to go long, but we ended up continuing to trickle. So what do we do now? Higher high, higher low, higher high. So now we're expecting some sort of higher time frame retracement. And now I'm looking at 135 as a means to go long, continuing with the overall market. Okay. Same thing with NJ. Again, I was really upset at NJ because it didn't do what I wanted it to do, but oh well, you know, we just got to move on. I was hoping that because our objective was up here, we had a huge imbalance, straight selling volume. That was supply. And I knew that we swept liquidity, huge buy to sell, and then swept sell side liquidity. And in the process of doing that, we failed to generate the lower low. We made a higher high. So now we've broken the structure of the upside. We failed to make a lower low. The trend is now bullish, higher high, higher low. I was really hoping to long this up into the objective because we haven't come into it yet. We still had room. Right? So that ended up being a beautiful setup, and it just didn't work. What made it even more of a beautiful setup was the fact that first and foremost, this was the end of this pullback. This was the last selling volume before the break of structure. This was the supply. This was the reaction from the supply that failed to make the lower low higher high. So that becomes the demand naturally. And what happened? Well, when we broke the structure to the upside, we pulled back into that level. And that's exactly where we had the reaction. So where's the counter trend this way when we break structure back to the upside? Well, lower low, lower high, lower low, supply, lower high, failed, higher high. That becomes demand. And there's a lot of other lower time frame confluences in here, which I won't go over for the sake of time. But anyways, that was our first repricing. And then we can see that that was our last buying volume before the higher high was made, meaning like this was the lower low. Could you classify that as a lower high? If price wanted to go short, could it have? I mean, maybe, but because that was supply, but we had the reaction, we failed, and we went long, right? So that was sort of like two areas of demand, 1 and 2. So we had both of those levels ready. So when price made the higher high, we were looking for a pullback. Wednesday, we didn't come into the level. We made a higher high. So I'm thinking, okay, cool. Well, we stopped. We're going to come back down, sweep sell side liquidity, come into one of these two levels and go long. And we can see we didn't do that. We stopped and then just went long from there. So a little annoying. It is what it is. I'm still looking for longs, to be honest with you. I just because of the fact that XXXJPY is extremely bullish, I want to continue to buy this. Right? We are still in a higher time frame uptrend. I think 88.75 maybe a level, maybe 90 on the higher time frame. Because higher time frame supply is right here. This is really high, low, failed, lower low. So that becomes really our last buying volume in here. So we could come definitely higher for sure. But also, if I just zoom out a little bit, we're still bullish. Boom, boom, we could make a higher high. And we know even on the lower time frame across the board with correlation, XXXJPY is definitely still bullish. So why, I was hoping originally this price, right, when price is right in here, that we would push into 79.25 to sweep this low and come into our last demand. We didn't do that. And would it be a valid question to ask me, could we? I mean, sure, we could possibly run lower into it. I'm just not expecting it because we're very weak on the Japanese yen, and we've also swept a lot of liquidity right in here. Even this previous low right there, we swept it by a couple of pips. And that's when this trend started to break. So I do expect us to continue. But if we have an overall pullback, then I will be eyeing 79.25, but that won't be for a long time. So will I still be looking to buy from down in here? Yes. I'm going to get rid of that supply. I still will be looking to buy. And then these take profits can go higher. So what I could see if we do get an overall retracement, maybe this starts to turn into like some sort of trend that we end up sweeping sell to buy from a higher time frame perspective. That could be what it's forming. Who knows? But what I know is that these two levels are valid and we have sell side liquidity. So will I be looking to buy from here? Absolutely not. This isn't really demand, but even if it was, I wouldn't be looking to buy here because we have liquidity and then the valid levels down here. I'd be waiting for some sort of sell to buy into that level to sweep sell side liquidity. Now, could I have an intraday long from this level? Maybe. How would I go about doing that? Well, it would never be just a buy limit from this level because of what I just talked about before, but that is our last, within the pullback that happened here. That's our last supply zone. Had the reaction, that can be our demand. So I would have to see something as beautiful as this. I would have to see something like that, because that tells me, at least in the short term, building of liquidity, sell to buy into the demand that had the reaction from supply, breaking the counter trend structure, pulling back and mitigating. To go long, at least short term, maybe intraday, that could be a good opportunity. But I still have to have it in the back of my mind that we have these higher time frame levels down here. So I would never place a buy limit here. But if we get this sort of price action, then yeah, I would look to take some risk from that particular level if that happens. But again, who knows? That could never happen. I mean, it may never happen is what I meant to say. So we'll have to play off of what we see and not what we want to see. All right. That's NJ. Last one, AUD, NZD. So we have been watching this pair for quite some time. And we are looking at taking long opportunities. So on the daily time frame, for anyone who is new, I'm going to do a brief top down. It won't take too long. I just want you guys to fully understand what I'm looking at. So an AUD, NZD, the picture here, if you had to save your life, would you click the buy button or sell button? Probably the buy button, right? Just because we've swept sell side liquidity and we're making higher highs and higher lows. It's more probable. Just from a common sense standpoint, it's more probable. So, just going based off that, let's keep building confluence. So from 2015's low to 2020, so that's 5 years of price action, we came down and created overall lows, essentially back down to 1. If you look to the right where the price bar is, 1.0000. Very, very interesting level. So probably not going to come any lower. There's probably some sort of price ceiling that's keeping price from coming lower than 1. When you see something like 1 or like some sort of significant round number as a all-time high or low, that might have to do with some sort of currency devaluation regulation. And legally, they may not be allowed to take price any lower than that for that point. I don't know, but I know that is real. I know there are regulations that prevent, moving price too fast in one direction for a significant period of time, because it could be significantly devaluing one currency over another. And I know there's laws around that, I think. So anyways, we swept the previous low from the higher time frame. And in the process, this was COVID, obviously. So we had 1, 2, 3, 4 touches, sell to buy, reprice, continue. What is this also? Break and retest to the T of this trend line. So I just know this is not a real move. This is such a retail move. Everyone and their mother who's selling right in here is jumping for joy, but I'm just sitting back like the Grinch, knowing that they're going to wake up in the morning with a loan account. And that's exactly what happened. They retail just doesn't understand. Anyways, so we had this supply level, right? Supply failed to make the lower low, higher high. So that turns into demand. So this is from a higher time frame perspective. In the process, we make a higher high, overall pullback to try to make a higher low for another higher high. That's where we had the reaction, beautiful reaction. In the process, sweeping sell side liquidity. So within here, I'm not going to go into all the lower time frame stuff, but there is lower time frame, beautiful accumulation and price volume divergence. Anyways, had a very strong reaction here. But we can see that we came into a prior supply zone. So we came into a prior swing point, but we failed to make the lower low, and we made a higher high. So lower time frame, we created a counter trend. Low, high, low, high, low. We failed to make the lower low below that level, and that's where we came back and retested the area of accumulation. So this is a valid accumulation zone because it was just a retest of the accumulation to continue higher. So in that point, right, the counter trend is sitting right here. So low, higher high, and in the process here, we failed to make the lower low, higher high again. So that's where we started the uptrend. Right, so really 1.050 psychological level. And you see how these psych levels line up with these areas of interest, right? Starting last selling volume. Actually, this was the imbalance, filled that before going long. So that's our demand level after we make a new higher high. So again, higher high, higher low, higher high. What do we naturally expect? Higher low. Okay, cool. We know that that's an interested level. 1.05. So let's scale in over here. 1.05. What happens prior to a level being met? In this case, there was type 2 manipulation. We had equal highs, or really just this area pool of liquidity. We had equal lows. Entice buyers, take their stops. Entice sellers below the breakout here, mitigate, go long, take anyone who is selling stops, right? So that type 2, buy to sell to buy, shaking everyone out of the market before the real move occurs. So we finally start to create higher highs and higher lows. We create a channel. We ended up breaking out, which is why I think definitely that we're going to come higher. I think this is from a higher time frame perspective. This channel 1, 2, 3 touches, 1, 2, 3 touches here. You can even see the break and retest that occurred right there. So I guess retail got lucky in that sense. Anyways, from a higher time frame perspective, break and retest of this channel. This is just from a higher time frame perspective. I think that we're definitely going to go long. If we don't go long, well, that's why we have to use good risk management every time, because there's nothing's 100%. But we had two levels of interest. There was a lower time frame because we can see supply right here. There was actually a lower time frame. You can't see it because this is the 4 hour, but in the 1 hour, there's like a lower time frame reaction that turned into demand that we actually had a reaction off of beautifully right in here. That's because that's where we originally created this buildup of liquidity. And we had the fake out to entice sellers. We actually mitigated that demand to the left because we had two levels. We had one right here, one right here. And then we had that sell to buy, reprice, continue. So I bought it from that level. It was a very beautiful trade. But then there was no follow through. And we ended up continuing short. So right there, that's a perfect example of having a million confluences and your trades still lose. So you have to use good risk management. And you have to have the psychology of knowing that just because something like that happens doesn't mean your system or your strategy is bad. It just means you just had a losing trade. You have to get over yourself. That's really what it is. So we ended up coming lower, right? So didn't get the full follow through in that initial position, but I'll go to the 1 hour and show you where our last point of return is. Because remember, we had the huge buy to sell to buy. So likely we're not going to come below this low. And this is our last point of supply because that was our real last selling volume, right? So this demand here, and really just this demand here. So this entire region, that was that last selling volume that failed to make the lower low that started to make the higher high and broke the structure, right? So that will be our last point of return. And if you see to the right, after all this price action, we created 1 touch, 2 touch, 3 touch, and now we're starting to break lower. So I fully expect us to come into at least 1.0575. That's where I have my orders. First, half risk, half risk. First stop loss is going to be just below the overall demand. And then the other stop loss is going to be below the overall low. Why do I do it that way? So for those of you who are new, the reason why I do it that way is because having a stop loss just from the open of my initial entry to just below the overall low, which is the appropriate stop loss, is only going to be a 1 to 6 with a huge push. This is a swing trade with only a 1 to 6. Even though it's still a good risk to reward, you could probably squeeze more out of it. And this is what I mean. Having 2 entries, splitting it up half and half, 1 below the demand and 1 below the overall low, 6.3 plus 9.4 essentially. That is, let's see, what is that? 9.4. I'm just using my calculator. I can't think right now. Plus 6.3, 15.7. But we're using half risk on each of them just to stay within our risk management. So we divide that by 2, and that's 7.85. So if price comes into here and goes long, well, then now overall we're making 7.85 R instead of just the 6.3 R that we would have had if we just had one position. It's because we had a better risk to reward here by splitting up the positions. Now you run the risk of price coming lower, hitting the first stop and then going long. But in all reality, I'm still willing to take that because regardless, the probabilities of us coming below the low is very slim to begin with. So with that being said, I have a high probable chance of making some money. So even if I hit the stop here but don't hit the stop here and go long, then half risk and half risk, this becomes what, 6.3 divided by 2 on half risk minus 0.5% with the loss there. So I'm still netting 2.65%. So not a lot, but at least still some money, right? But that's how you can increase your risk to reward by splitting it up with different stops, obviously based upon what's given. Obviously, I'm not just placing random stops anywhere. I'm placing it strategically below the demand and then 1 below the overall low. So that's what I'm looking for. And I will tell you, that I already have buy limits placed on those. And this will be a swing trade. My first take profit, well, I'm not going to give you my first take profit, but one of the take profits will be 1.1240. Why? Because within this entire expansionary move, even though we are bullish, so we're fully expecting a higher high. Why? Because we're bullish. If we're making higher highs and higher lows, we would expect a higher high. So my overall take profit will be somewhere up here, right, to make the higher high. But one of my take profits will be 1.1240. Why? Because we have to pick take profits that are likely to reverse from you, meaning like you take profit not just wherever you want, not at like a 1 to 2 or 1 to 3 or just nonchalantly. You place your take profits at levels in the market that have a high probable chance of reversing from you. I'm not expecting price to stop here and reverse from me, but if it's going to, then it would do it from that level, right? Because this is, you can just see all the higher highs and higher lows, higher high, higher low, higher high for like years and years and years and years and years, right? Then all of a sudden, this is where the trend broke. This is our last demand because this is our last supply. We failed to generate the higher high above the high. We stopped, repriced, continued lower. So that's our supply zone. That's why I would have one take profit there. Anyway, still looking for overall longs. And again, sorry for talking your ear off, but that is all I have for you guys today. Hopefully that helped you. Let's see, any questions? Hopefully you guys are writing all this stuff down, marking off on your chart, or even just taking pictures. Definitely very important to keep up with this throughout the week. I know there are thousands and thousands and thousands of people in the Trading Nut community, but only 40 people are on this live session. I do appreciate it. Thank you for your time. And you guys are really setting yourself up for success, right? Not a lot of people would want to get on a Saturday and watch or listen to me talk for 2 hours, but it's a good sign and a good character trait that I see in you guys already. So again, I do appreciate your time today. I apologize for my voice. It's a little not feeling the best, but glad I was able to still get on today. And it kind of just goes to show the amount of people out there who are wannabe traders, and there's only 45, 50 people on these lives. Just goes to show that they don't want to go the extra step and learn even on a Saturday. They'd rather get handouts. And that's why all of those people are failures. I mean, I'm just being quite honest. That's why 95 to 99% of people lose, is they can't do something as simple as just take some time to learn. They always want the easiest way out. They always want people to just tell them what to say, tell them what to do, tell them how to trade, tell them when to place trades. And that's why those people always fail. But I'm glad you guys want to take the time and learn. Let's see. How long will this video be up? You mean the live session? They're all recorded. If that's what you meant, they will be recorded and posted to the Trading Nut YouTube channel. So right when I end the broadcast here, it just gets uploaded to his YouTube. Let's see what we have here. Just jumped into the live. Where can I find your platform? You can check us out on our website, arielfxtrading.com. And if you just like to book a call with me and just chat about trading and how we can, best assist you along your trading journey, that is definitely something that we recommend to see if you're the right fit for our program going forward. If not, then that's why we have those calls, to make sure. So I'll drop that in here. There we go. My IG. If you just search Ariel ___ FX, it was a double underscore. So ARIEL. You can find us there. We do post some occasional stuff on there as well. A lot of updates come through our IG story. So it's kind of nice to just follow, so you can kind of keep up with that as well. Let's see. I'm trying to learn what you recommend. YouTube videos are only going to do so much because there's so much information out there. It's just going to create a lot of confusion and information overload. If you talk to a lot of professional traders, they'll say YouTube is sort of probably one of the worst things a beginner trader should do, just because there's so much different perspective. And when you're trying to write all this stuff down and trying to apply it, it's just a crazy information overload. And it's way too much to grasp and to practice consistently, because we understand that trading is a discipline. We have to be disciplined with specific set of rules. And when you're looking at so many different videos and trying to apply it all, obviously it's not going to work. Right. So that's why I say, find a mentor. It doesn't have to be me. It could be someone else that you resonate with, that has a good background in regards to trading, who has credibility behind their name, and that you would like to work with. Right. And then learn from them and stick with them and not hop around from group to group. I'm telling you, I've been in this industry for 6 years. I've literally done it all. So try to take my advice when I say hopping around from group to group, month to month, or even staying in for just a couple months and then leaving. It's not going to do you any good. Trading takes years of experience. Just because some of you may be failing with a group for 6 months doesn't mean that it's a bad group. Well, there are bad groups out there, but it's the information that's being taught and the strategy behind it that is the most important, right? So just because you're failing for 6 months, I was failing for 18 months before I became successful with a mentor that was an institutional trader for 2 decades. That's not to say that he's a bad trader. It's just to say that I needed experience. It's required, just like learning a skill, right? You don't just, I always use the example of guitar, right? You don't pick up a guitar day one and just become a professional guitarist. You don't pick up a football at the age of 10 and get drafted to the NFL at age 11. Impossible, right? It takes practice and years of discipline and all that stuff. So find a mentor, make sure the mentor is definitely credible, and invest in your education, right? Because this is a problem I faced. I only had, I think, $400 to my name back when I was like 18 years old, right? And that's because I had to work for my money. Now, I grew up in a very, comforting household, right? I never experienced any challenges like some of you may have experienced. I had a family who is still together, and they spoiled me, but I still had to work for my money. I had to buy my own car. I had to get a job. I had to do all this stuff, right? So even though I was comfortable, I didn't have much money. Then my mindset was, okay, if I'm trying to learn trading, which was started back in 2017, I was trying to find groups and pay for products and services that was within my budget and not what the true value of what I wanted to get out of it was, if that makes sense. So like if I only wanted to spend $100, I would try to be like, okay, what can I buy for $100? That's not the mindset to have. You need to find the information that will help you take you from where you are to where you want to be, and however much that costs, save up for that, right? Because just because you can afford a $100 product doesn't mean that that product is going to help you become a professional trader, right? Even Grant Cardone says you can buy products, you can buy information for $50,000 could help you become a multimillionaire. There's information out there that costs a lot of money that can help you become a multimillionaire. But who's willing to spend 50 grand on something? Probably not a lot of people, because they don't want to see that money go out of their bank. That's just, because it's just the mindset that people have. But to answer your question, I would just say, yeah, definitely take it slow. Learn from someone who is credible. Take your time. Don't hop around from group to group. Find a mentor, someone personal, not just a huge trading platform like, oh my gosh, IML Academy. I shouldn't even be saying that, but they're awful. I used to be a part of them a long time ago. They're just network marketers that don't know how to trade. Put them up in a trading challenge, they're scared. Let's see. I work full time, so anytime spend learning, going over weekly trades is crucial. Yeah, I mean, definitely. Don't sacrifice, your personal life for your trading, right? I mean, obviously there will be sacrifices along the way. You will have to put up some time to learn, but don't sacrifice your sleep. Don't sacrifice personal relationships. Because at the end of the day, life that's important. Having, relationships with people and your own personal time and your own fun time is definitely important. Obviously, sacrificing certain things is definitely required, but moving trading into your personal life and making it part of your personal life in sort of a routine fashion is definitely good. I'm not saying sit in front of the charts for 24 hours straight and neglect your life, right? Never do that. But you know what I mean? If you have to sacrifice, waking up a little bit earlier or putting in more time instead of watching TV, just stuff like that. But yeah, I mean, people work at their own rate and people learn at their own rate. So some people have the time to learn more than others, right? Some people have 9-to-5 jobs. Some people have, other responsibilities. So don't neglect your personal life responsibilities, but just fit trading into it. And if it takes you longer, it takes you longer, right? I was in college learning how to trade, and I had school, went to the gym every day. I had to take care of myself, had a couple jobs. So, I mean, you just have to work it in. That's all it is. Right. Let's see. Yeah, that's a good point, Brian, and I appreciate the kind words there. Combining Ariel Fx courses with following analysis consistently will help you learn. That's the reason why we have an all-inclusive mentorship program. That's why we don't sell our courses individually from our VIP analysis group, because, and it's just the basic logic is, you take courses, you're naturally going to fail with it initially because you don't have experience. It's not to say it's bad information. It's definitely good information, but it's applying it is going to be challenging at first, especially if you don't have experience with it. So we first have to root you in that education, right? Help you understand how we trade, but then reinforce that through mentorship. So that's why we can't sell you a course without having that mentorship to go with it, because it's really just important. It's really it's a complement to each other. But then, of course, the VIP, if you don't understand how we trade, seeing the analysis and all this stuff, it doesn't help you learn because you don't really know what you're looking at. So it's hard. That's just why we do it like that. Currently backtesting one pair, going through old daily breakdown videos and VIP, best learning for me. Yeah, it's great. I mean, we try to resonate with pretty much everyone. I'm not like a lot of other traders who, will try to teach based upon their own level of experience, meaning certain people will teach how do I say this? I go based upon if I was learning, right? If I was learning, when I first started learning, how can I resonate with my old self? That's how I teach. Because of course, if I try to teach you, if I sit down with you in a one-on-one session and I'm let's just say you're at the same level of experience as I am, then I can have a different conversation with you, right? But if I'm speaking to someone who's new, I have to have a different conversation, right? Because if I have that same conversation with someone who's new, if I'm talking to someone of my experience level, it's not going to make much sense to that person who's new because they're new, obviously. So we try to make it as simple as possible, but still, taking these complex concepts and really dumbing it down to make sure it resonates with people. People can understand it and apply it easily, and then taking it step by step. So, smart money doesn't have to be difficult, but I mean, trading is difficult. However, the strategy behind it and the way that you apply it doesn't have to be difficult. It needs to be more streamlined. People need to be more disciplined, following a trading plan. The way I break down charts, in my opinion, and you correct me if I'm wrong, I don't think it's that hard to understand. I'm just going based upon basic structure and basic supply and demand, and basic, just areas of interest and sponsored moves, and just like the basic underlying nature without going into complex detail. But it's just the basics that people seem to fail to grasp and apply. And it really doesn't need to be challenging. Trading needs to, you keep it as simple as possible. All right, you have a trading plan, manage risk, manage your psychology, follow that plan, follow the concepts that work, and over time, profitability sets in. It's a natural, learning experience. But it takes experience. You can't speed up time, therefore you can't speed up experience. Right, so that's just what it takes. Let's see, I think there was a question about, I think I skipped one. What's your opinion on ICT saying that there's no such thing as supply and demand? I've never watched an ICT video. I never learned from him. I know he trades some sort of smart money, right? But I have my own mentor. I have my own way of trading. I don't need to look at anyone else's videos, because if my system's already profitable, there'd be no point in me to. So I don't know how he views supply and demand. I'm guessing based upon your question, he says there's no such thing. It's I would say it's a yes and no question. He's not wrong, but he's not right. He's not wrong because the institutional interbank algorithms based upon the order book and volume and liquidity are what drive the market, right? So in that sense, there's no supply and demand. However, the relationship between buyers and sellers in a general market naturally creates a system of supply and demand, right? Because if you think about it from a general perspective, what is supply? Supply is you have an abundance of something, right? Demand is supply is you have a product, you have supply, you have what it is you're selling. Demand is people want that specific product. So and just like if you learn in economics class, as demand rises, price is going to rise, therefore supply is going to fall, and it always ends up balancing each other out. Supply, when there's an abundance of supply, naturally the prices fall. Why? Because if there's too much of something and no one wants it, you have to lower the prices for people to come back in with that demand. As you lower prices, more and more people want to buy that. So it all evens out. So in a sense, yes, there is supply and demand, but at the same time, there isn't. It's very hard to explain. So I'm sure he's a very smart guy. I mean, I'm sure he does well. I have nothing against ICT at all. I just don't know him like that. Like, I don't know how he trades. I don't care to know, because I stay in my own lane with my strategy, because I know what I do has worked for a long time. So I can't really answer that fully, if that makes sense. Hey, Nathan, does your algorithmic program for passing challenges pass only phase 1, or can it also pass 2 phases? So if it's with a prop firm that we work with, yes, it will pass the 2 phases. That's part of the passing service. Is if there's 2 phases, we pass both of them. But it's only for specific prop firms. Like, for instance, Nova Funding. Nova Funding is a really great prop firm. We can pass those challenges very easily for you guys. Unfortunately, when it comes down to account management, we don't have any more spaces available for Nova. We are able to pass Next Step Funded. We do have spaces for account management as well for that. We do have spaces for My Funded FX, and we are able to pass those challenges. Just dependent upon the prop firm. See, as of right now, we don't have a system or a software or some sort of algorithm to pass like my Forex funds or FTMO challenges yet. So I can't pass those yet. But see, that's why it just depends on the prop firm. If it's a prop firm we work with, then yeah, obviously we will be able to pass it. And then we could have spots available for management. Getting a chance to look into big PIP funding. I have not. It depends on their challenge rules and their funded account rules as well. So for like a challenge, if they allow HFT, then I could probably pass it. If they don't, then it's going to be a little tricky. All right. Any other questions, guys? Anything else? If you guys are interested in account management, like for us to pass a challenge for you and then manage that funded account for a profit split, we have recently started that a little while ago. And more details will come in our Discord, hopefully by this upcoming week, with the new prop firms that we have new spots available for. But if you are interested, you can send me just a private message, and I can just pin your message, and then we can talk later about that opportunity. All right. Well, anyways, guys, I appreciate the time today. Hope you learned a lot. Hopefully you guys wrote down and jotted down those levels. We'll see how this week plays out. For those of you who are in our VIP community, we will talk to you all on Monday. If you guys are not in our VIP, we will be reaching out with a Smart Money Sundays episode tomorrow. So stay tuned for that. But that's all I have. So have a good rest of your weekend and happy trading to you all. Take care.